session of the live virtual classes conducted by the Board of Studies, Academics of the Institute of Chartered Accountants of India. We continue our discussions on accounts of companies. Once again. We have covered much ground in the last two classes, and we have finished up to revision of accounts and recasting of accounts. It's quite an interesting topic. As I already mentioned, it is a reversion, or it is a reaction to the Satyam scam, right? And reopening of accounts and revision and recasting. So we saw this in the last class. That was the last topic we saw in the last class. Okay. So up to the 2013 law, it was quite impossible for financial accounts of companies to be reopened and revisited or reopened, etc. It was pretty impossible. Whereas, thanks to Section 130, in peculiar circumstances, the two things should be there. Combination. The earlier account should have been prepared in a fraudulent manner, or there should be mismanagement of the company casting a doubt on the reliability of accounts. Either one of these two conditions. And you cannot go back to a period beyond 8 financial years. Sometimes, when the central government is investigating a company, they will direct the company not to destroy books, even beyond 8 years. So, no books can be, in those cases, it can be longer than 8 years. But where no investigation is going on, a normal company, it has to preserve its books of account only for 8 financial years. Therefore, reopening also cannot be for a period beyond or earlier than 8 financial years. So, 8 financial years and fraud or mismanagement. These two combination, only then reopening for recasting or revising is possible. Right. This can be done only at the application of certain authorities, not suo motu. Suo motu means on its own motion, or nor can the company take the decision by itself. So, application is made by these authorities to the court or tribunal. It's a judicial proceeding. Fraud is established or mismanagement is established. 8 years condition. Then notice is served on the applicants, company, etc., and they all give their views. And finally, the authority, court or tribunal, will pass an order to revise or recast. It's a clear judicial proceeding. It is not the intention. It cannot be done at the instance of the company. So mainly because in the Satyam scam, there was a huge fraud. The financial statements were wrong, but there was no mechanism within the Companies Act to revise. Therefore, it was done as a special case, right? Now it's common, everybody can. Now we come to voluntary revision. Voluntary revision of financial statements or boards. This is voluntary. Means the company's directors themselves can take it up. There is no need for any other person to come and make an application. Here it should appear to the directors that the financial statement or board's report does not comply with section 129 or 134. So the entire gamut of 129 and 134. The 129 is a wide section. So the notes is covered, the balance sheet format is covered, content is covered. Anything, if you want to restate the notes, if you want to restate numbers and all, you can revise. Okay, there's non-compliance with 129 and 134. Board's report can also be revised. Okay. Now the board may prepare a revised financial statement or board report in respect of any of the 3 preceding financial years. So you may note that early in reopening, okay, it was 8 years. Here they restricted to 3 preceding financial years. Preceding financial years. We are now in financial year 25-26. No, 26-27. We are now in April which is in 26-27, correct? So 3 preceding financial years would be 25, 24 and 20, 25, 24 and 23. So, sorry, 26, 25 and 24, correct? 26, 25 and 24. You can revise. You can apply to the tribunal for prior approval. Tribunal shall give notice to the central government. I'm so sorry. Just put it in silent. Okay. So here again, there is an element of judicial review. An element of judicial review in as much as there is. One minute, I'll just put it in message. So the board cannot on its own motion sort of go ahead and revise revision. So they had applied to the tribunal for prior approval. The idea is casually the board should not do this. Okay. Then the tribunal shall give notice to the central government and the income tax authorities to be sure that what's happening is and they will also be aware of what's happening and take into consideration representations, if any, made. In fact, recently in one of my own audit cases, I had this peculiar problem that one of the companies, there were 3 directors. One of the directors, he borrowed money from a finance company. Okay. He forged the board's resolution, etc. Something has happened. I do not know all that. Either he forged it or whatever. Money was taken from the finance company. Either that, whatever. And the money was not received by the company. The finance company released the funds to the director's personal account. Clear indoor management issue here. The bank or the finance company was put on notice. It is a classic. You study an exemption to the exceptions to the doctrine of indoor management. So normally the third party is supposed to inquire what is the procedure. It's a board resolution. Call for the board resolution. He produces it forged, or he in his own name signs chairman and gives it. Who knows who attended, whether the board meeting was held. The finance company need not go behind it. They cannot ask him to prove and all. They can release, but with all the KYC, with all the controls on, lending, borrowing, or for that matter, depositing money in a bank, this finance company has taken an application from the company for a loan and has released the loan in the name of a director. It's a clear case of being put on inquiry. This is a classic example of being put on inquiry. It's one of the major exceptions to the doctrine of indoor management. So the finance company was put on inquiry and should have made diligent inquiry as to why this is to be done in the name of the director. They should have refused. They said, look here, the borrower is the company. Now, 1 year over, 25 March over. Now in 26 March, the other 2 directors wake up and discover that this loan was given to the PAN number of the company's PAN number, it is reflecting in the company's PAN number. So they then go to the other director, something, they then, in the course of audit, they reveal. Now, the loan was taken in before 25 March. So 25 March was completed without taking into account that liability. Though that other director has been paying that loan correctly. See, all this, if done correctly, would have been, the company could have taken it and given it to him. But they wanted to circumvent 185. See, this is the problem. All that. Why I'm giving these elaborate case study examples to you is to make you understand how complicated it is in practice. It's easy to ask questions in the classroom. The real questions are out there in practice. Okay, when peculiar cases, vichitram, we say, they come to us, and that vichitram we have to handle. So this is a case classic. So the only way out is, I said, look here, go under 131, reopen, you go back and revise. 1 year you can do easily, no problem. The facility is there, go to the tribunal and all. But they were very reluctant. What to do? There is no other go, because in fact, 26, I said, I'll qualify because, in fact, 25, I was not aware. 26, I'm aware now that there is a liability. 25, I was not aware. 26, I'm aware, I will qualify. And when I qualify, that issue will become a bigger issue. Rather than you take it up yourself and revise. Along with this year, they revise that year also. That was told to them, 25 March. The loan was received in 24. Startup company. Still, they are not doing anything. I don't know what they're going to do. Okay. In fact, point I'm making here is it's a good provision. It helps you to correct these type of errors. So you can go back, revise the accounts, disclose the liability, regularize the affairs, file it again, and then again go for current year can be opening balance can come correctly. So before finalizing 25, we could have done 24 opening balance corrected. So it made sense in June 25. Now it's too late. Now it's like 2 years you have to revise. It was 26 in the meantime. It's a big story. I can't tell you that whole story. It also involves professional ethics, violation of code of conduct. Everything is brought into the story. Anyway, so that's what I finally, in one discussion with the other professional, I told, this is an extraordinary good case study for so many things, professional ethics, indoor management, revision of accounts, all sorts of things, corporate governance. Anyway, so whatever it is, the tribunal, if you're giving notice, etc., will take up the matter and then it will pass an order for revision. And then the revised financial statement and board reports will be filed with the registrar. So with this, what happens now? The whole thing gets corrected and in a very official manner rather than, as if it is an offense. Correct. I think, see, while there have been certain drafting errors in the Companies Act 2013, I think the intentions are honorable and the way they have done it is good. Protecting the investor seems to be a greater concern. I think this is a good idea because this gives the opportunity to the directors short of a fraud. See, here also I wouldn't say in my example that there is a fraud. It well could have been discussed by them orally. Maybe they honestly were advised by some other professional, maybe a company secretary, that section 185 is there. It's not in your syllabus. You will come across its ugly face when you try to prepare for self-paced module, set A or whatever, set B or whatever it is. When you come to final, at that time you will study 185. And that 185, all that loan to director prohibited and all. Maybe to circumvent it, they have done like this. God only knows what they were trying to do. God only knows what they were doing. The startup company entrepreneurs, they are warped minds. They're peculiarly warped minds. What happens? God only knows. Okay? For them, laws of physics, laws of double entry, nothing will apply to those companies. They operate in limbo without any reference to any law, including, I hope, the laws of physics also don't apply. The 3 laws of thermodynamics do not apply to startup companies. That's what they think. Anyway, so voluntary revision, conditions for voluntary revision. Such revised financial statement or report shall not be prepared or filed more than once in a financial year. See, for example, suppose there is a revision of accounts of 25, 26, 27 financial year, I will do 25 March ka, 24, 25 March ka, 25, 26 March ka. Once I do that in 26, 27, I cannot again do any more reopening in 26, 27. That's what I understand from the plain reading of this provision. Such revised financial statement or report shall not be prepared or filed more than once in a financial year. Now, what was the intention? Was it that the financial statement of a financial year should not be revised more than once? If that is so, then this sentence is grammatically wrong. Because then you should have said such revised financial statement or report shall not be prepared or filed more than once for a financial year. Instead, they have said in a financial year, which means, to make it clearer, I revised the 24-25 in 25-26. Again, I cannot make any more voluntary revisions in that financial year. Agreed. Now, again, in 26-27, can I revise 24-25? Going by this section, yes, I can revise the same year any number of times, but I cannot do more than one revision in a financial year. I hope this is clear. More than one revision cannot be done in a financial year. But the same financial year, I can revise it any number of times. But I have a feeling that honestly, the intention of the law was the same year you cannot keep on revising it again and again. And I don't think they wanted to do this revised financial statement more than once in a financial year. Again, problem is preposition in and of. English usage versus vernacular usage. Confusion. That is the problem. Now, the detailed reasons for revision of such financial statement or report shall also be disclosed in the board's report in the relevant financial year in which such revision is being made. In the relevant financial year. So, when we now file the revised accounts, we will make detailed note. Loan was wrongly taken in the name of the director, not disclosed in the books of the account. The liability is now recognized. And as of 31st March and as of 31st March 2025, that is what was the status, everything will give. See, there's no, if you go by this method, transparency is assured. And nobody can say we are not aware. Where copies of the previous financial statement or report have been sent out to members or delivered to the registrar or laid before the company in general meeting, the revisions must be confined to the correction in respect of which the previous financial statement or report do not comply with the provisions of section 129 or section 134 and the making of any necessary consequential alteration. Okay. So, the revisions must be confined to correction in respect of which the previous financial do not comply with in the making of any necessary consequential alteration. Okay. For example, in my example, the liability is recognized, loan is recognized, interest also should be recognized, shown here. But though whether it will be allowed under the Income Tax Act is a different, but it should be allowed because under that PAN number only the interest was paid. So, to my knowledge, it's all confusion. Okay. The central government may make rules as to the application, etc., and all for this purpose, and make different provisions according to which previous financial statement or report are replaced or supplemented by a document indicating the corrections to be made. So, make provisions with respect to the functions of the company's auditor in relation to the revised financial statement or report. Definitely, that. See, again, the revised has to come to us for audit, which will go through the process of revised limited audit so that we can take instructions and work accordingly. Require the directors to take such steps as may be prescribed. Right. See, basically, to err is human, to forgive, divine, and MCA. So, we can as well allow this to happen. Fantastic. So,
ये संकेत जी, सर से बात। हाँ हाँ, सर से बात करता हूँ। संकेत जी सर ज्वाइन हो गए को होस्ट कर दीजिए
Yeah, sorry, I just got disconnected. Now I'm back. Shall I proceed? Connection is good, no? Yes. I think one of you would have pointed out that I'm not here. Yeah, no problem. I was not there for a short while. Now I'm back. So, any excuses for unintentional? Yeah. See, how can there be intentional mistakes? Yeah, I don't know both intentional and unintentional. Actually, in my example, it was. You can always say it can argue it either way, because if one director makes a fraud and the other director is not aware, is it intentional or unintentional? See, one more thing I'll tell you. Voluntary revision doesn't cure violations of the Companies Act or fraud, etc. There is any fraud, any action taken against the directors for mismanagement or conducting the affairs of the company in a manner prejudicial to the interest of the company, etc. Those proceedings can happen. There it's up to them to prove intentional, unintentional. In the meantime, the accounts are corrected so as to reveal a proper. That is the intention of this section. The section is not meant to excuse people from whatever they do or to give any amnesty to directors for intentional mistakes. But assume that if there is an error, you want to correct it, come through this section. If any intentional wanted fraud is there or anything is there, the consequences of it has to be faced separately. There you say intentional, unintentional. That is in those proceedings you try to establish all that and proceed with it. That is a different proceeding altogether. Okay. Right. Now coming back to NAFRA. As I mentioned earlier, the whole framework of the Companies Act 2013 with respect to accounts and auditors is totally influenced by Satyam. Satyam scandal took place in 2009, around over a period of 6 months it happened. At that time, the Standing Committee on Finance proposed the concept of the NAFA for the first time in its 21st century. Okay. That was before the Act. Before the Companies Act, the proposal had come. In the meantime, they were very clear that a new law is going to come. About that, they had no doubt because they were pushing it like blindly without any concern or consideration, because there are many suggestions that why bring a new law? You revamp the existing law, which is more than enough. But they preferred that nothing of the old should remain. And in that process, they threw some portion of the bathwater, baby out with the bathwater, if I may say so. Some really good provisions went. Some of the draftings were, the earlier drafting was excellent. They could have simply retained it. Instead, in their eagerness to create something new, they managed to confuse the issue and all. But so that was always going to happen. So 9 onwards kept on, let us have it, let's not have it. So they formed the authority. Then that act was no longer relevant. Therefore, they said, let's wait for the new law. So then the Companies Act 2013 came and this regulatory framework was made. So it all took a lot of time, sir. Bureaucracy doesn't happen overnight. It happens over a period. So it took nearly a lot of time before the NAFRA was actually established in 2018. But in the meantime, the base structure, the regulatory framework was put in place, right? And the establishment of NAFRA as an independent regulator for the auditing profession will improve the transparency and reliability of financial statements and information. It's what was felt. So NAFRA has many roles it plays. It has many roles. Sir, the CG has not made any rules as of today. Okay, so don't worry about it. Nothing, no rules. It has the power to make rules. That's all. It is not a pending topic. It has the power to make rules. That's all. It is given in that section and I have covered it. No rules are there. It is not. It is covered. Okay, not pending. I came to NFRA and then only I got sort of disconnected. So the central government may, by notification, constitute. Yeah, thank you, sir. So anyway, good of you to point it. So coming back to the NAFRA, NAFRA came in 2018. In the meantime, Act is already there, established, everything is there. So just like our GST appellate tribunal, everything is there, but the appellate tribunal was not constituted. Then appellate tribunal was constituted, then members were not selected. So it took a lot of time by the time it has come. Okay. That's simply because government works slowly. Governmental and bureaucratic organizations work slowly. So get used to this. Get used to this. Okay. If you are going to be pressured, you only will be pressured. These organizations will go at their own pace only. Okay. This is something that 40 years of practice has taught me, that nothing can be done to speeden up the income tax department. They work in their own way, at their own speed, which sometimes suddenly picks up very fast. When it is an emergency, some big shot has told them to do something, it will become an emergency. Abhi to, abhi kar do. I want it, Mr. Srikanth, I want it by today evening, like that. But when it comes to the citizen or the other side, hey, come on, Ajo, yeah, you come on Friday, Monday, we will see. Today, Friday, hai na, chutti hai, kal, okay, you come tomorrow, you come on Monday, we will see. So this is the speed at which they will work. So there is no way they will work very fast. I'm not saying this any derogatory sense, but in a very, very practical and pragmatic way, get used to it. Okay. And so that you also have to go at that pace. Many times when I feel, when I enter a government department, any department, forget which department, or any organization which works on a bureaucratic mechanism, the time will stop still. The outside time different, inside time different. Once you come inside, time stands still. Okay, it doesn't move fast. It goes slow. Suddenly, the time itself goes slow. I've had this feeling when I entered some. But then, what you need to do is you need to sort of align yourself to that timing and work with that time. That's all. Otherwise, your BP will only go up. Your health only will be spoiled. The central government may, by notification, constitute the National Financial Reporting Authority to provide for matters relating to accounting standards and auditing standards under this Act. Okay. So, two roles they play. One is to notify NAFRA, to notify accounting standards and auditing standards. Okay. Secondly, of course, to oversee the quality of the professions. So, two major roles. Make a recommendation to the CG on formulation and adoption of accounting and auditing standards. See, the central government will definitely notify, right? But before the CG notifies, now CG is basically government. Government has no expertise or knowledge to recommend anything or notify anything. So they have the power to notify. But they may, so they have constituted the NAFRA, which would be having sufficient number of extremely expert members. These members will in turn go through it, and at their meeting, they will approve it. And they will recommend it to the CG. And CG thereafter will notify it so that it becomes applicable to companies, statutorily applicable. Both accounting and auditing standards. But again, without forgetting that, this role was earlier played by a body known as the National Accounting Standards Board within the institute. Within the institute, the ASB was there. The ASB then became the NASB, which was slowly outsourced out of the institute. And now the NAFRA has come. Okay. But ultimately, shall we say, the formulation and the approval and the whole thing happens from within the institute. The members, every member has a stake in the accounting standards and in the auditing standards. So we also contribute to it. And once it is notified, ICAI also will notify it, and they make it applicable to us, and government will notify it so that it makes it applicable to companies and banks. Right? Actually, it's good because earlier, without this, we couldn't enforce the accounting standard on companies because they would simply say it doesn't apply to me. Now they can't do that. It applies to them as much. Oversee the quality of service of the professions. Here they are making it very wide and saying professions so that all are covered. But technically, we are the main targets. Why? Because Satyam, you only had it's because you who missed the point. You means the profession of accountants. We missed it. And so as a profession, we have been accused of fraud and all. As a profession, I don't know how that can happen. As a profession, but it has happened. Many of you, I don't know what you were doing in 2009, but I was actively in practice, and I was a professor and a trainer in the public speaker and secretary of Tamil Nadu Investor Association, etc., post Satyam, etc. Tamil Nadu Investor Association secretary, public speaker, addressing audiences on stock market valuation and value investing, taking classes for B schools. So all these roles, I used to be bombasted. Okay, even if you open my mouth and talk about financial statements and using financial statements for valuing companies, somebody in the audience will stand up and point finger and say, "You are a chartered accountant. How can you say that?" Then why can't I say that? This is because no, what happened to Satyam? Satyam is one rare example, one rare one-off situation. There are so many companies that have been correctly audited and are going on. Statistically, zero value. But because, it is a halo effect, we say. Satyam sort of stole, everybody remembers Satyam. There are so many, it's like simple. When there is a train accident, you remember that. But you forget that there are millions of trains that go on a daily basis, on a monthly basis, on an annual basis. Nothing happens. They arrive, they enter, they go on time. Nobody, all that is forgotten. That one freak accident becomes an example of the failure of the railways to run the trains properly. Something like that. So this unfortunate, but that is how human beings think. That's called immediacy effect. It is called immediacy effect, where we give more importance to something that happened in the now rather than something that happened in the past. And this is called a fallacy. It's all called immediacy fallacy also. Because what happens, the immediacy fallacy is you base all your valuable decisions on what's happening now. Whereas what you should be really looking at is what happened in the past over, say, a longer period and see a pattern. And it is that pattern can help you predict what's going to happen in the future so that you can take proper steps to protect yourself. I give this point because most of the time people are, I can see you, the way questions are asked also, the immediacy effect. You're worried about immediate. Whereas what you should be really doing is taking the question papers, analyzing it, seeing the pattern, how the questions are moving, which is what I used to do when I was a student. And I've noticed that most students who cleared the exam with rank or first attempt and all were doing that rather than reacting and asking, what is this? It's immediacy effect. Don't do that. Wait, there's a pattern. Look at the pattern and then see if the pattern is replicating consistently. And then maybe work out a black swan event there. Maybe look at something that could change. And so this is a professional approach rather than a reactive approach, is what I would say. This happens it happened heavily in the case of Satyam. It happened heavily in the case of Satyam. So, monitor and enforce the compliance with the standards, perform such other functions relating to the above activities, right? So these are important aspects of NAFRA. So NAFRA will have a chairperson and not more than 15 members. And the chairperson would be a person of eminence, having expertise in accountancy, auditing, finance, or law. The chairperson will be appointed, but the rules are there. You don't have to remember all the rules and all that. Just remember the chairperson to be appointed by the central government. The chairperson and other members who are in full-time employment with NAFRA shall not be associated with any audit firm, because some of them would be members of our institute, senior members of our institute. So if they are a firm audit, they're partners of an audit firm, they have to get out. They cannot be in related consultancy firms also, completely out. Only then they can come into NAFRA. They can't be a partner for during the course of their employment and 2 years after ceasing to hold such appointment. So not only after ceasing, also for 2 years they cannot be a partner or in full-time, should not be associated with any audit firm, either as partner, employee, whatever. Now, this is a very, very interesting and serious issue. Notwithstanding anything contained in any other law for the time being in force, the NAFRA shall have the power to investigate into the matters of professional or other misconduct committed by any member or firm of chartered accountants registered under the Chartered Accountants Act. I'm covering this here because it comes in this section, which is in accounts. But you can obviously see that it has a link with audit, in as much as, in addition to the disciplinary committee formed by the institute, NAFRA now comes on top and it has the power to investigate. But again, only with respect to those companies to which NAFRA can apply. We will see those companies also. Only such companies can be investigated by the audit. The auditors can be investigated by NAFRA. Okay. This may be done either suo motu or on a reference made to it by the central government. Where the NAFRA has initiated an investigation, no other institute or body shall initiate or continue proceedings on this matter. Thereby, to that extent, other disciplinary proceedings of the institute will be kept in abeyance. NAFRA will take over and see it. Is the point. A general feeling has been that, better to have an external body. Again, Mr. Anil Kumar, you are not listening at all. You are not listening at all. You are not concentrating at all. You are more interested in asking questions. Please see, when did NAFRA come? 2018. When did scam happen? 2009. At the time, there was no NAFRA. See, all this came subsequent to NAFRA. Subsequent to something. At the time, NAFRA, nothing. That is the problem. There was no NAFRA. There was no serious fraud. Later on, if you come to investigation, you will see in final serious fraud investigation office, SFIO was not there. All that was planned. But by the time they missed Satyam, the learnings from Satyam were implemented into this. Okay. And that's what I'm saying. See, at that time, the Institute Disciplinary Proceeding only was happening for that. And of course, the matter was referred to the Andhra Pradesh High Court. For information, the Andhra Pradesh High Court has acquitted the member. For information. It's a public document. I'm not revealing any secrets. It is published document. It is very much available in the court records. The member has been, it's very much available. You just go to Google and Google, you'll get that, where he has been acquitted of any criminal misconduct. Okay, only negligence, he has been. So, whatever it is, just for information. Now, NAFRA will going into these disciplinary proceedings and all, will have the same powers as a court. You will come across this in all the quasi-judicial body provisions, whether it is tribunal, there is NCLT or NCLAT, or whether it is, competition commission, whatever you name it. If it's a quasi-judicial body, you'll find that it will have, see, because the quasi-judicial body is not a court. Therefore, the strict procedures of the Code of Civil Procedure 1908 will not apply. Okay. Whereas with certain modifications, these bodies will have the same powers as are vested in a civil court under the CPC while trying a suit, especially for discovery of documents, okay, submission of documents, summoning and enforcing attendance of persons and examining them on oath, inspection of any books, registers, etc., issuing commissions for examination of witnesses who are either too ill or too old or who are geographically far away and whose evidence is not very important but still needs to be documented. Then you can send somebody. A commissioner of oaths can be sent to them and they can he can take their deposition and come back. The court will generally appoint a junior advocate to do this. Yeah. Now we got it. So there was no NAFRA at the time, but see, central government was very much there. See, NAFRA is only an instrumentality of the central government. It is not some independent body. It is basically Ministry of Corporate Affairs that is sitting on NAFRA. So the ministry was always there. Not, even the MCA was not there. If I'm not much mistaken, even the MCA was not there at that time. It was a department of the Ministry of Finance at that time. Or maybe it had come. So I think that was one fledgling ministry that just come, was flexing its muscles and trying to see what it can do and how it can make an impact on corporate community. At that time, stamp came. So where professional or other misconduct is proved, NAFRA can make an order for imposing penalty. So 1 lakh up to 5 times the fees received. So 1 lakh is nothing when compared to the fees that is charged by some of the larger firms. 5 times the fees would run into crores. 5 times the fees would run into crores, much more than that. In case of firms, 5L to 10x. So for proprietaries, it's 5 times. Firms, it is 10 times. So to take the audit fees charged by many of the larger firms, you will find that 10 times the fees would be killer. And they are the main targets because the size of their audits are, the audit volumes are higher and they would come under this criteria. Whereas the smaller practitioners would go below NAFRA radar. But 1 or 2 who come above NAFRA radar, we have to be very careful and very careful. Also, while signing any bank-related certificate or bank-related document, you have to be very careful. Believe me when I say this. If a banker is asking for a certificate, I will see it 100 times because bankers, again, like startup companies, they operate outside the 3 rules of double entry. They operate outside the principles of accountancy and finance. For them, the whole world exists where whatever they say is correct. As far as they want to give a loan to the client, whatever they say is correct. Later on, when the client does not repay, they will simply ignore other things. They will ignore their own urgency to give that loan and all. They will simply say, who gave that certificate? Chartered accountant. Catch him. To protect ourselves, we will go for a complaint against him to the institute disciplinary proceedings. So better very clearly inform them, not possible. And even in the case of losing a client also won't go because client also knows that if we do something today, even he will be in trouble tomorrow. Sometimes they see the bankers will ask their client to give statements that are factually wrong. Forget principle, factually wrong. Then principle violations. And so we'll have to explain to them what happened. In fact, and many of them are not basically professionally trained accounting professionals. They are basically people who have cleared some competitive examination and come into they're basically graduates, economics graduates, engineers, whatever, who cleared the competitive examinations and came a probation officer and climbed the ladder. So they possibly have very little knowledge of accountancy. And banking being such except at the top balance sheet finalization level, nobody need to know accountancy because it's all one-sided. You are only handling one aspect. It's like a giant elephant. A large bank is like a giant elephant. Nobody can know its full except the central strategic auditors, the branch auditors to an extent, and the balance sheet section. Only we know what that bank is, how much that bank is. The employees themselves may not know what it is in real terms of accounting. Okay. They will also can debar the member for being appointed as an auditor or internal auditor or valuer for a minimum 6 months to a maximum period of 10 years. See, all this was very much there in the disciplinary framework already existing, except that it was within the same body. Now they have taken it out and created an independent statutory body which would monitor. Nothing is going, there's no panic here because this is maybe new to us. It's very much common in the US, UK, Germany and all to have such a body. See, for example, the US has the State Security Exchange Commission, which is a very, very powerful body. SEC is a powerful because SEC is like, is the equivalent of SEBI, but it also has this power. The CC has this power. So in England also you have such a body, so that they have the right to do this. It's not as if NAFRA is doing something that is wrong. It's just that it's suddenly come on top of everything and it becomes a little bit of abstract. See, audits are being conducted correctly, documentation is being taken, no violation is there, qualifications are done, and how the qualifications, that's what I said, documentation. How did you arrive at your opinion? Document should be there. Then, absolutely, you need not worry. You can just stand up there and say, this is what I did. What is my mistake? You tell me. And of course, protecting yourself in certain cases. Later on, when you come to auditing, I'll show you one important protection that has been given to an auditor. Earlier, it was possible that a client could force you. Now he cannot force you. He cannot force you to do anything. Thanks to the protection given by, more than one protection has been given by the MCA to us. It's not that while they are taking over the disciplinary proceedings, they have not protected us. They have also protected us from unscrupulous managements and unscrupulous directors. We are protected. And we can be very blunt and bold with these people. So NAFRA is a quasi-judicial body, as I said. Therefore, the judicial process includes a power of appeal. And against the NAFRA, you can go to the NCLAT, the National Company Law Appellate Tribunal. Okay. And if you wish to go further against NCLAT, you go to the Supreme Court directly. This is the pattern of appeal. This is called appellate remedy. And in anywhere where there's a quasi-judicial body or a judicial body passing an order, there should be a degree of appellate remedy. You should have the right to appeal to a higher authority. Of course, the Supreme Court is the highest authority. The full bench of the Supreme Court taking up any question would be the highest authority for deciding any matter. Beyond that, you cannot. So these are the companies in respect of which NAFRA may exercise its powers. So NAFRA cannot exercise its powers with respect to all and sundry companies. So listed companies, an unlisted public company having paid up capital greater than or equal to 500 crore, turnover greater than or equal to any one condition is satisfied, you are in. Either paid up capital 500 crore or turnover 1,000 crore or outstanding loans, debentures and deposits greater than or equal to 500 crore on 31st March. Okay, based on in the March of the previous financial year. This is based on the audited balance sheet of the previous financial year. So once you trigger these threshold limits, then you come under that audit, that company's audit will come under the purview of infra. Listed companies are straight away in. Always remember that. In all these lists, listed companies are always in. Okay. Later on, when you come to rotation of audit also, you'll see similar list is there. Listed companies are always straight away in. Remember that. Insurance companies, banking companies, companies engaged in generation and supply of electricity, bodies corporate or companies referred by CG to NAFRA in public interest, bodies corporate registered outside India, which are subsidiary or associate of A to D, subject to certain conditions. So, bodies corporate registered outside India, you can't go and catch. But if they are subsidiary or associate of A to D, from A to D, if any one of these bodies has a foreign subsidiary, the audit of that subsidiary also will come under NAFRA scrutiny. So these are the companies. A company or body corporate referred to in A to D, provided it's registered in India, may have a subsidiary or associate company, which is the body corporate registered outside India. Okay. Now, income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or consolidated net worth of such company or body corporate. See, the idea is you can take up an investigation or call for data from a foreign subsidiary, but the income or net worth of such a subsidiary or associate company should exceed 20% of the consolidated income or consolidated net worth. That is including the subsidiary total. Of the total, the subsidiary should contribute 20% of the net worth or income. Only then you can bring it into this net. The idea is materiality. So that if it doesn't contribute anything, you cannot go and do investigation there. See, today, foreign subsidiaries are great methods of circulating capital, circling as we call it, taking out money and bringing it back, all that sort of stuff. So you have to be very, very careful. So NAFRA also does recommendation of, as I already saw that. Okay. So for this purpose, it will receive the recommendations from the ICAI. And based on that, it will sit in a meeting and recommend it. Usual procedure. If a company or any officer of a company or an auditor or any other person contravenes any of the provisions of NAFRA, then shall be punishable under 450. See, 450 of the Act, the 450 is not in your syllabus. In 450 is a open penalty, where in the law, a section prescribes some duty, but does not mention a penalty, then failure to do the duty or doing something contrary to it, the penalty will be in section 450. This is the omnibus section where no specific penalty or punishment is provided, but there is something which is being violated. What is the penalty? Straight away come to 450, and 450 will guide you. Company and every officer shall pay fine of up to 10,000 rupees. Or it's a continuing one, fine which may extend to 1,000 rupees for every day after the first during which the contravention endures. So 450 will be 450 not in your syllabus, just for information. Okay. NAFRA will meet at such place and shall observe such rules of procedure in relation to the transaction of business. Central government may appoint a secretary and such other head office of the NAFRA shall be at New Delhi, and the NAFRA may meet such other places in India as it deems fit. So you remember the authority for Investor Protection and Education Fund Authority. I hope you remember that authority. Okay. So if you remember, that authority was to be audited by CAG. Same way, the accounts of NAFRA shall be audited by the CAG. And the NAFRA shall maintain accounts as prescribed by CAG and shall be audited by the CAG. Okay, the audited accounts together with the audit report thereon shall be forwarded annually by the NAFRA to the central government. Right. And it will also prepare an annual report. Together with accounts, audited accounts, it will be sent to the central government. And then the central government will place it before both the houses of parliament. Again, I mentioned it there, if you remember. Once it is placed before both the houses of parliament in one of the sessions, parliament. See, for all you know, in that session, many people will attending. They won't even know that this happened. Matter of, it will be over. NAFRA annual report passed or blah blah. Chief Speaker will announce it. It will be minuted in the parliamentary proceedings. Thereafter, this report will become a public document available to any Indian citizen to be seen. It is no longer classified because it has been presented before the members. Who are they? Now of all times, you should know who they are. They are the representatives of the people of India. They were elected by the people of India. So these elected representatives who represent you and me have been informed. So through them, you and I have been informed. If you want to know more, you can always go to the website and download the PDF and go through it fully. Okay. So all is available on the Parliament website. Other websites are there. NGO websites are there. Everywhere you can go and check it out. You just Google it, you will get it. Yeah. If you want any report, just Google it, you will get it. Not a big deal. If you want to read it, if you want to read it. One such report was the Sarkaria Commission report. Go and check out whether that was available or not, whether it was a public document, very much a public document. Any commission report now, once the commission releases the report, it is again placed before both the houses of parliament, and then it becomes public document. Long ago, if I am right, in late 90s, there was a Kelkar committee, Kelkar commission report. It's a nice report. Now possibly it's outdated, but most of the recommendations of the Kelkar commission are now being implemented in the new directives. And only that, the amendments to the existing tax structure in the new tax code are all to a great extent based on Kelkar. Kelkar, even at that time, the commission said, Kelkar, we always say Kelkar, Kelkar was the charm. Kelkar commission very clearly said, take away all the deductions, all the stupidity, you take it away. Straight away, reduce the income tax. Okay? Straight away. So what is there if all these deductions, straight away, it is income tax. You will find that it's better. So that's what is being done now. But still this new regime, old regime, all confusion. All old people will come to me and say, Mr. Srikanth, should I select new regime or old regime? So if you want to pay more tax, select the old regime. If you want to pay less tax, select new regime. That's all. Your choice. No. There is a deduction. The deduction, then only claim, and then you pay the old tax. That will be higher. Pay no deduction, nothing. Just pay the new tax. It's far less. It's up to you. Peace of mind. But still, there are arguments. Even now, I have opened my mouth. I'm sure somebody in the group will put, no, you're wrong. Old regime is better in this category, that category. God is great. So, thanks to making income tax more complicated as a practitioner, I'm thankful. However much Kelkar wanted to simplify, it's not possible to simplify the tax law. We should be thankful for that. At least tax practitioners should be thankful for it. On capital gain, one gentleman, very friendly way, was telling him, sir, don't assume section 54 deduction. It has to be claimed in the income tax return. For that, certain documents are there, computation and all is there. No. I know what I'm doing. You leave me. Now everything is online. I'll take care of myself. Man will go and make a big mistake. Then there'll be huge addition and they'll only come running. By then, the matter will be too late. 147 and all that. Concealment, everything will happen. By then. Anyway. So under section, now we have moved. Thanks to, let us say goodbye to NAFRA. No, you and I can, in this session, we can say goodbye to NAFRA. But reality, now we cannot say goodbye to NAFRA. NAFRA is very much there, sort of breathing down our backs like a, monster waiting to catch the unwary practitioner. So be very, very careful. Central government prescribes the accounting standards under 133. Earlier, when the 2013 Act was passed, NAFRA was not there. Not constituted. Okay. So now, till then, now it was recommended by ICAI and examined by NAFRA. If central government itself will notify. If NAFRA is constituted, then examined by NAFRA, but recommended by ICAI. If NAFRA is not contributed, then recommendation by ICAI and examined by NACAS. NACAS was what I told you, that earlier avatar, National Advisory Committee on Accounting Standard. They sort of took over from the ICAI ASB, Accounting Standard Board, and sort of took over and said, we will now tell you what is to be done. Thank you, sir. Please tell us. After we have told you, then you tell us again what is to be done. The same thing what we told you, you tell it backwards. Fantastic. Now we come to a very important, from the exam point of view, very important topic. Okay, very important topic from the exam point of view. Frequently tested because there are numerical portions here. So just concentrate on the numerical part. If you have a doubt, you can always raise at any time. So now we move to what is known as corporate social responsibility. Corporate social responsibility. CSR. Okay. CSR again, is a concern of the recent concern of the Ministry of Corporate Affairs. Earlier, there was no compulsory CSR. See, the issue here is not whether CSR should be done. Earlier, our institute syllabus, this subject, earlier, long ago, I mean, early 2000s, it was called Law, Ethics and Communication. Law, Ethics and Communication. Law, which is what you're now studying. Ethics was also there. And communication and all that was there in one paper. Then they removed it and it became what you are now studying, corporate and other laws. In between, there was LEC. That time, ethics was there. So, ethics I used to teach. So, I also, my guru, Professor K. Sanantaraman, has written a book, very, very easy to understand, question answer type book for, at that time, for intermediate. It's called something else. CP, some things, name they had for that. I don't know what they call it now. Those days they had like this. So that paper, Law, Ethics and Communication, Ethics and Communication I used to take because I was also a HR trainer. So I used to take Ethics and Communication. Okay. Now, in ethics, there was a topic called Corporate Social Responsibility. When in that book I have written this part of it alone, this area, the first paragraph is quoted from that book only, right? So, companies must make profits and maximize shareholder value. So, no doubt about it. In fact, I would say that is the only job of a company. Your capitalist like me, okay, I will say that is the only job of a company. Companies must make profits and maximize shareholder value. Once they do that, they have satisfied their purpose in life. You formed the company for what? For doing social work. Then you form a non-profit organization, form a Section 8 company. Why are you forming a commercial company? Sometimes some entrepreneurs themselves will come and tell me, sir, my purpose is not to earn profits, but I'm running this business more as a CSR. So don't do that. If you want to make profits, run it as a commercial enterprise. If you don't want to make profits, you can always go that side. No. Profits will be made, but our predominant motive is to serve society. It cannot be. A company cannot be formed to both serve society and to make profits. Your goal is to make profits and maximum shareholder. But while doing so, you can have ancillary or side goal. Okay, 1, 2. I am a pure capitalist. Okay, I can make bland, bold statements like this. But most companies cannot afford to do that because they have an image. So they cannot say this is our only job. No, they will amount to worshipping at the feet of Mammon. So that is not to say that this is their only goal. Right? Agreed. They owe a duty to serve the communities and society within which they exist, function, and derive the sustenance for their growth. So, a company cannot exist in vacuum or make money in vacuum. It is the community that consumes the goods and services. The same community that provides the labor force. See how this is pure economics. Was you employ him, you pay him salary, and then he spends, he buys your own goods, demand increases. That's pure economics. And so economic growth happens. Economic growth cannot happen by giving freebies. Economic growth happens when companies are run efficiently, pay salaries on time, give the goods at the best possible prices, at the most economic prices, the highest quality. When they do that, then automatically the economy starts growing. So this is a larger philosophy. But within that framework also, companies can try to serve society. Okay, nothing if they do. One classic example of this, living example, is Tata Group. The Tata Group makes a lot of money, no doubt about it. They are one of the top money-making companies in the country. But they also give back to society. Okay? They have to, if they failed, so right from the earliest, family, earliest generation, they have felt that unless we take care of the environment where we operate, we have no business to exist. If they fail to fulfill this duty, there will be no more than a cancer that destroys the very thing on which it feeds. So it's a balancing act. How much of it you're going to give back and how much. And again, this is a board decision. This is not, nobody can decide for them how much, what is possible, what is to be kept aside, and what is to be given away. So CSR has always been there. It is not as if the whole world was eagerly waiting for the Companies Act to be amended, 135 to be introduced, and then only we will start CSR. No. CSR has been there for easily 50 years, more than 5 decades we have had CSR. Okay. In different terms. Corporate social responsibilities. Society and business, as early as 80s started. 80s onwards, society and business and society. The paper was prescribed in the universities, business and society. So the social business, it's a bigger story. So CSR is a conceptual framework that analyzes the various ways in which the corporate community can pay back or return to society a portion of the profits they derive from it. I repeat, a portion of the profits, not the entire profits. This usually takes the form of social welfare and other measures taken in and around the geographical area where the company operates. So if you look at Tata Group, they have concentrated most of their CSR, I'm not saying entirely, most of it in and around their main focus of operation, which is in Jharkhand, which is in Jamshedpur. Okay. Earlier Bihar, now Jharkhand. So this is a very important thing. And they developed that piece of remote location, and they managed to make it into an oasis of growth and prosperity in the region. Okay. So, see, that model had been replicated in many of these places across the north, that belt, Bihar, UP, MP belt. Today we will find more economic welfare there. That was not replicated everywhere. So the benefits from such CSR measures would accrue to the public at large and not necessarily to those who depend on the company. Staff welfare alage, CSR alage. Don't confuse doing some good for your own employees with CSR. CSR should benefit the public at large. If rightly applied, CSR can be an engine driving the economic and social upliftment of society. See, sorry to give you these inputs. Just in the context, you can learn it. And since we have the time to do this, it's a revision class, we can't even waste our time on this. But think about it. Famous man called Muhammad Yunus. Of course, now maybe he's not so popular, but Muhammad Yunus was the father of microcredit. See, microcredit works on a very simple principle. If you understand it, it is the ultimate dignity. There's a lady there. She has to sustain, feed a family. Maybe the male members are not able to do that due to many reasons, whatever social reasons are there, justifiable, unjustified, whatever. This lady has a responsibility and she also needs money. And the money that this lady needs is extraordinarily small. You will be surprised. 300 rupees is a huge thing for a flower seller. And that she has to obtain at huge interest rate. And even the smallest problem, she loses her entire livelihood and everything goes. Just like, what happened in our so-called pandemic lockdown. Lockdown was fun for many of us who are privileged, but it was one of the worst disasters that could ever happen to the economically weaker sections of society. Their whole livelihood was destroyed overnight for no reason at all, and they suffered. Whatever it is. So Yunus simply thought, if I can give 300 bucks to them, not one of them, 300 bucks to about, say, 100 people, and ask them to repay with very, very nominal interest. That is how microcredit started in Bangladesh. It has now spread across the third world, where every country is now using microcredit to empower women and families and growth. I have also personally visited across remote rural areas in India. Believe me when I say this, in the interior Karnataka, interior Odisha, interior Rayagada, interior Andhra Pradesh. And I have gone to the remotest villages, Masanagudi tribal village, and have seen how microcredit schemes has made a big difference for children's education. Because once the lady makes money, the first thing she spends on is education of the child, especially the girl child. And the next generation becomes at least matriculate or if possible graduate. And then the next generation and so on and so on. So that is how the social welfare happens. I've seen it happen with my own eyes. And it works. It works. All that is needed is a seed money. That's all. In fact, I can tell you many of these stories, but one or two are Tirupati. There is one famous NGO called RAS. Okay, fantastic thing where the founder was such a great man, and I've met him 3 or 4 times. He's no more now. So he has taken ultimate Gandhian, goes to the remotest villages and he makes them. He gives them money, takes the money out. What they give back, he creates a permanent rotating fund. Permanent rotating fund. Today it's self-sustaining. They don't need any more help. That permanent rotating fund is capable of supporting. He has created that over 7 years. So the CSR is not, though a pure capitalist, I'm not against the CSR. I'm only saying there should be a meaning in what you're doing. CSR should not be just throwing money. It should be growing society. If it is not going to grow, merely throwing freebies, it is not CSR. That is more of photo ops and putting it in the annual report type of stuff. Not a good idea. So coming back to the mundane section 135 of the company is that somebody had a wonderful, brilliant idea, and they thought, hey, corporates are rascals. The Srikant and all are private, capitalist pigs. So they will not spend money, man. So better make it compulsory. Let me make these guys spend. So what to do? Of course, we've got the Companies Act. We can do anything we want with it. Let's have one more section, 135. What is that? Compulsory CSR. Chalo. That is how this 135 comes. And compulsory corporate social responsibility. Let us bring about a CSR thing. So they said, they didn't say compulsory CSR. They said, we are going to prescribe certain threshold limits. Every company which goes above the threshold limit should form a CSR committee. That is all they say. They say they should form a CSR committee. Thereafter, those companies that have to compulsorily form CSR committee are also bound to compulsorily contribute CSR. So that limits we have to see. So how to calculate that net worth and all that based on the balance sheet of the last immediately preceding financial year. Right. Now, this is not very important. In the CSR rules, you will find they have defined activities. Certain activities are not to be considered CSR. Not. Let us see that first. Not. Any activities undertaken in normal course of business of the company. For example, a pharma company does R&D for discovering new drugs. Is this CSR? No. It's an ordinary course of business. For another thing, very, very important. We go, sir, during pandemic, we did a lot of CSR. What CSR did you do? Sir, we distributed food hampers. Can I see one of those hampers? Yes. You have put your company's logo on it. Yes. That is marketing. It is part of business only. You're promoting your business. No, sir. And then why did you put? If you wanted to feed those people, why you put your logo there and all? So anything that is meant to promote your business in the normal course, in fact, promotion will come separately as a negative. Even then, if it is in the normal course of business, don't try to cover it up as CSR. Okay. The only exception was, pharma companies which were developing COVID-19 drugs and in collaboration with some government institutes and all that. Those guys alone were exempted. Though they were marketing the COVID vaccine, they were exempted because of COVID. COVID was the exception of exceptions. Then in the name of COVID, you can do anything. And that too, it was only for 2021, 2022, 2023. After that, no. A pharma company developing COVID after 22-23, sorry, it is business activity, no CSR. Okay. any activity undertaken by the company outside India. Please note it, Your Honors, outside India. So whatever you do should be in India, outside India. For example, we want to take a group of doctors to northern Sri Lanka. We want to take them to Yarpanam or to Kilinochi, and we want to give artificial limbs to the people who have suffered, blah, blah, blah. So all that is laudable goal. We bless you, but not CSR. It will not count as CSR for the compulsory CSR purpose. Hello, brothers and sisters, you can continue to do it. Nobody is curtailing your eagerness to contribute to society. No, you cannot claim it as compulsory CSR. That's all. Okay. Contribution of any amount directly or indirectly to any political party. See, remember, later on when you come to final, you will study political party contributions are given special treatment, no limit. Anything you want, you can give. All that is there. But here it will count as corporate social responsibility. Activities benefiting employees of the company. For example, if there is a school in which exclusively the children of the employees are studying, then no. But if it is common, where everybody is studying, you're doing for the school, good, no problem. Independent school, maybe which you are supporting, no problem. Where nearby village children are also studying, your employees' children are also studying, no problem. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its products or services. I told you now, sir, we are promoting health, sir. How? Promoting marathon. Very good, sir. CSR. It is a CSR, no doubt. Sir, we are giving T-shirts with our company's logo. No. Sponsorship. No. You are deriving marketing benefits. No. Out. I told you, that is absolutely out. No one put your company's logo anywhere. Activities carried out for fulfillment of any other statutory obligations. For example, under the Factories Act, you are expected to maintain certain basic amenities for your employees. And now, when you're only complying with that, for the purpose of compliance with Factories Act, do not try to book it under CSR. Okay. See, there's one more catch, which maybe we'll see it later, otherwise I'll tell you now itself. Any amount which is spent under the compulsory CSR provision will not be allowed as a deduction under the Income Tax Act. Whether there is right or wrong, no. So, are you able to see? The minute you want to claim it as a deduction elsewhere, don't bring it under CSR. Because the minute you bring it under CSR, you will lose the ID deduction. 37 gone. You can't get it. Okay. Now there's a Schedule 7, which gives a big list of activities. I will not waste your time reading it or taking you through it. Or should you? Just be able to go through it once, don't mug it up. Don't waste your time mugging this up. See that most of it is covered, almost everything is covered. Promoting education, special education and employment. I think we missed this now. See, outside India, only one exception is training of Indian sports personnel representing any state or union territory at national level or India at international level. See, simple, sir. You can support a athlete who is an Olympic material. Right, sir? Olympic rifler, Olympic archer. Good. You want to? Good CSR. Nothing wrong because covered. Sports is covered. Okay. Training to promote rural sports, nationally recognized sports, Paralympic sports, and Olympic sports. One of the CSR items. Not a problem. Now, for this purpose alone, when you're see, because rifling, the best coaching is available in Dubai. You have no other coach, you have to send him there. Right? So he comes to you for some support. You can give it to him. And you can ask him to go there and get trained. There is only exception to the activity not being undertaken by the company outside India. Right? Now, my dear friends, suppose that guy wins the Olympic. Your company gave him, say, a substantial amount for supporting his training there. Definitely the guy has an obligation here. So you can call him back, take a photograph with him and put it in your website and put it in your magazine and put it in your annual report. No, that is not thing. He can't wear your, even say, for a limited purpose, in the Olympics, he can wear your company's logo. Even then, be careful. I would say don't do that. But you can, because only on his body somewhere to show that he represents you. Okay, nothing wrong in that, but be careful. Okay, should not be obvious that he is promoting your products. Means later on, you also pay him money for coming on an ad and saying, I support Dubakur Limited for its great products. I trust it. Gone. That is part of marketing. And that cannot be done. Okay. So these are all various things. In fact, one time I got a call from one of the MDs of one of our auditing companies asking, Mr. Srikanth, can I have a Goshala? Can I have a Goshala and whatever I spent for the Goshala, can I send from the company and claim it under CSR compulsory? Definitely you can. Definitely you can. Goshala, the way you are saying Goshala, it looks something like thing. But if you really look at it, it is basically animal welfare. Correct. Animal welfare. So animal welfare is covered. So they also wanted opinion. I said, no problem, pay me money, I'll give you an opinion also. Not an issue. Great. Enjoy. I don't know. The company does not know what to do. Then you give it to the Prime Minister's National Relief Fund, PM CARES Fund. Here, Prime Minister's Citizen Assistance and Relief in Emergency Situation Fund, PM CARES. See how the wordings are also beautifully done. Huh? PM CARES Fund or any other fund set aside by the. This is the Schedule 7. Later on, we will find the reference to this fund. Be careful. That fund, which is set up by the central government for socio-economic development under Schedule 7. Schedule 7 the fund has been set up. You can contribute to that fund. Any contribution to that fund, don't worry. It's compulsory. CSR satisfied. Okay. Rural development, slum area development, disaster management, educational assistance, promoting education, including special education, whatever you can go ahead and do it. So these are all activities. Don't mug up the entire list. Broadly, be careful about not considered CSR. There they might ask you a catchy question where they can say this company wants to do that and they claim it as CSR. Can they do? No. Be careful. This list is more important. You can say the negative list is more important. Positive list, don't try to mug it up. You're now exposed to it. Okay. Now we come to the crux, very important from the exam point of view. You should know it. Suggestion, there are many such limits. The NAFRA limit hai. This is there. Everywhere there is a limit based on net worth turnover, net profit, some outstanding liability. Suggestion, prepare a chart, section-wise particulars, and give the limits and put it in a single place. So, one advantage is preparing the chart, you will remember. Secondly, you can keep looking at it whenever you are free. So, it will go into your memory. Third, last minute preparation before the date of the examination. You can have. See, for example, today, I wrote my last exam in my MA Vainavam. I'm doing a course on MA in Vainavam. It's a philosophy course. So it's a huge syllabus, but we have to study. So as I was preparing over the last 4 months, I have prepared a set of notes. Now that notes also I have made it crux and I have prepared 7 or 8 pages of crux notes. Today morning, I read only that at 5:30 a.m. in the morning. I read that before I went for the exam. And I have written my exam and come back. Why I am saying this, first of all, there is no end to learning, except that what we learn will change. When I was 20 years old, 18, 19 years old, till 21, I studied CA. At 21, I became chartered accountant. At that time, that knowledge was important. I studied it. Thereafter, I kept on studying. Then later on, I became a HR trainer. So I studied coaching. I became a certified coach. I studied MSc in psychology. At that time, that knowledge was important. Now I am 60. All this knowledge is now irrelevant for me. The only knowledge that is relevant for me is that which will take me nearer to God. So that knowledge is more important than this. As you grow older in life, as you go through each stage of your life, your need for knowledge also should change. The type of knowledge that you acquire also should change. The older knowledge should become irrelevant. If at 65 also a man is going to be studying only for earning money, pity him. 60 also we can study. I'm not saying it is wrong. As a matter of, pride to become a member of the institute. But money should no longer be a criteria. Can be a pride. I have seen 62 years and all people have come because they wanted to do CA. Now they want to prove that they have done it. So no, I'm not trying to in any way to put on that, but the knowledge need should change as we grow old. 1. 2, knowledge should continue. The need to gain knowledge should continue. A chartered accountant can never stop learning. Never. Impossible. If you want to be a practicing CA, if you want to be a CA in employment, every day you have to make a daily advancement in knowledge, financial knowledge, taxation knowledge, etc., etc. Right. So it's such a chart you can prepare. Okay. And thank you, madam, for the kind words. Thanks for understanding. So coming to the point, this is very important. Try to prepare the chart, keep it with you. So day before the exam, day of the exam also, morning you can go through it. Give you a lot of confidence. As you enter the exam hall, your mind will be fresh. Get the question in the exam, remember, check, answer and go. So now what I'm going to do next 3-4 minutes, I will take you through this slide. Then I will possibly give a break. And then we can again start. So every company having net worth of rupees 500 crore or more, or turnover of 1,000 crore or more. So net worth 500 crore, turnover 1,000 crore, net profit 5 crore. So you write down somewhere on a paper now itself, because later on when we go to problems, you will need this number. So NW, arrow mark 500, TO, arrow mark 1,000, NP, arrow mark 5 crore. So write something like this and in a notebook that you have. Okay? NW 500. If you want, you put CR, TO 1,000, NP. There is a dangerous 5 crore. Many companies will reach this threshold. And remember, ladies and gentlemen, it is or. That means even if one of these criteria is satisfied, any one is triggered, then you have to constitute a CSR committee during the immediately preceding, if any of this has happened. Okay. But remember this, the number will be taken from the audited balance sheet of the immediately preceding financial year. Okay. Now the CSR committee should have 3 or more directors, of which at least one director shall be an independent director. Provided the company has the need. See, all companies need not have independent director. That when you come to final syllabus, you'll know. There again, they prescribe a certain criteria, almost similar to this. Only such companies need to have independent director. In those cases, there should be an independent director. If not, only normal directors will be there. The board of directors, the board's report shall disclose the composition of the CSR committee. We saw that there. Okay. Now what I will do, maybe this one. See, net profit you take as per the P&L account post-tax. Then, if there is any overseas branch, that profit you reduce it. Why? Because they are not permitting you to do CSR outside India. So, overseas profit also they cannot touch. For CSR, they cannot take. Dividend received from other companies covered under and complying with provisions of 135. See, you are a shareholder in some other companies which are having CSR compliance. They have complied with 135. Then that dividend part you can remove because that dividend is coming post CSR. Therefore, they say remove it and net profit. Okay. This is the net profit to be considered for calculating the 2%. Okay. Net worth definition we have seen. I don't want to waste your time. Now, I will leave you with this problem. Okay. We'll have a small break for say 5 minutes, max 10. Okay. Sir, small break, sir. Sir, small break. well-deserved break. Let us see what further we have. I hope some answers have come. I'm not seeing anybody answering. Okay. So let's look at this problem. RERA Limited, a company incorporated under the Companies Act 2013, having paid up share capital of INR 10 crore, turnover of 100 crore, net profit 3 crore. So do you remember those limits that we saw? Yes. And securities premium INR 300 crore. So net worth, does it include securities premium? Yes, it includes all reserves credited. Securities premium also included because, see, securities premium cannot be used for declaring dividend. Therefore, it is not a free reserve. But for calculating net worth under the Companies Act, securities premium is included. Securities premium is included for calculating net worth. That is why the formula I have given here. Otherwise, I would not have given the definition here. This again is something that you might want to do. Keep all the definitions neatly in one place. In your notebook, write down the definitions or summarize the definitions and keep it. Okay, especially the important definitions. During my lectures, if I have covered a definition, you note it and you keep it with you. What you should do, you should read the slide 2 or 3 times, 4 times. Take a pencil, pencil and write. Then take the book, correct it. Then ink it. See how much your memory will improve. Writing it once in pencil, then making corrections in pencil only, then inking that pencil. These are all methods of memorizing, methods by which we retain in our mind. So, share capital 10, 310, 500 crore now, net worth 500 crore now. So, 310 crore, even with securities premium. Turnover 100 crore. Net profit less than 5 crore, 3 crore. Now the CFO says it should be constituted. The director seek your advice as a professional, whether it is required or not. So what do you say? Correct. Beautiful, beautiful, madam. Beautiful. Not required. That's all. But in the exam, you can't write not required. You have to write elaborately. That's it. So turnover is 100 crore, net profit and net worth is 313. Why 313? Because current year profit is 3 crore. Current year profit is 3 crore. So total 313 crore. Okay. So total 313 crore. Correct? So RERA Limited is not. So look at this case now. As on 31/3/21 audited financial statement, we are having net worth 100, turnover 500, net profit 1. All are below. All are below the limit. Am I correct? Here it should be 500. Here it should be 1,000. Here it should be 5. Now here what has happened? No change. This has become 1,000. As on 30/9/2021, during the year provisional, this has become 5. So 2 criteria satisfied. Even one is there, it's enough. Okay. Now, question is whether they are required or not. See, you should be considering it as on the last day of the immediately preceding financial year, as per the audited balance sheet of the immediately preceding financial year. In that way, it is not. So subsequently, maybe on 31/3/2022, if this is still there, as on 31/3/22, turnover will be 1,500. So for 22/23 or 22/23, you have to constitute. But 21/22, no need. It's not required to constitute corporate social responsibility committee for the financial year 21/22, right? So this is the similar questions could come in the examination. Just be prepared for it. That is all. this being too simple, I think nobody wanted to respond also. I'm so happy. Now, a company covered in subsection 1 of section 135, which is not required to appoint an independent director pursuant to subsection 4 of section 149, shall have its CSR without such director. See, 149 of the Companies Act prescribes independent director, which companies to have. Now that criteria, if it is not applicable to this company, then no need. Okay. A private company having only 2 directors on its board shall constitute its CSR committee with 2 such directors. No problem. Private company. Though normally the CSR committee should have minimum of 3. Three or more. But private company having only 2 directors can have only 2 in the CSR committee. Where there is a foreign company, there should be at least 2 persons, one of whom shall be a person who is designated in India as a representative of that company, and one more person nominated by the foreign company. Okay. Now, it is quite possible that a company may go out of the CSR limit. Okay, for example, this year they are coming to the CSR limit. Next year they go out. Nothing can be done. For 3 consecutive financial years, they should cease to be covered under 135(1). 3 consecutive financial years. Thereafter, they can stop. Till such time, they have to. The reason is this. They ask you to contribute the average 2% of the average net profits of the immediately preceding 3 years. So as you keep slipping out 1 year, 3 years, 3 years. But then what happens? 3 consecutive financial years, you're out. So the next year, you need not constitute, you need not contribute. I repeat, you need not constitute, you need not contribute. Because under this law, if you have to constitute a CSR committee, you have to contribute to the CSR. But if you have 3 consecutive financial years, you have not done, then where the amount to be spent by a company on CSR does not exceed 50 lakhs. You'll be seeing that calculation a little later. Let us say that we calculate it and we get a number that is 50 lakhs or less. Okay, then the requirement of constitution of CSR committee shall not be applicable. The board itself will take care of the CSR spend. Okay, so these are all small criteria just to exempt small companies where the amount itself does not exceed 50 lakhs. They say, what? For 50 lakhs, why committee? You are the directors, you decided it. No need for constituting a CSR committee. CSR committee has to play a proactive role. See, in large corporations, the CSR committee will have a very important role. For example, huge company, let's take for example, Indian Oil Corporation. Indian Oil Corporation is a pretty new company. Okay. Now, in the southern region, I used to visit them for conducting training programs and all. And I used to sit with the ED, southern region, SRO ED. And at that time, SRO ED was a very huge, powerful man. He got the entire southern region. Now, SRO ED will be there. Now, he will have below him a CSR division. Imagine, there will be one DGM or each CGM below him, all the people. Their job is, see, imagine Indian oil profit, 3 years, average, huge amount. They will distribute it among the regions. And see, each region has a target now. It is no longer about, see, imagine an employee of a company is going to be engaged in spending on CSR. So they will identify, being a government company, being a government sponsored, whatever company, they have to follow the government procedure. So you can't just like that call, you come, you do know. There will be a tender, there will be this, that. Finally, they will arrive at certain, there will be limits. So there's no need for approval. Beyond this, approval by so and so. Beyond this, approval by so and so. Beyond that, committee, tender. all that, depending on the volume, amount involved. Typical of most government companies. See, even in large companies, there will be some such internal control procedures, but they'll be easily, can we say, overlooked or overruled in emergencies, and in government companies, we cannot so easily do it. We have to go through the process. Okay. And so the CSR committee will go through the projects, will identify projects, and they will spend all that. Okay. Monitor the spending also. The board of every company required to constitute a CSR committee shall, after taking into account the recommendations made by the CSR committee, approve the CSR policy and disclose the contents of such policies in its report. Link it with your 132. We saw that the content of the board of directors report. That policy. In case you have the policy on your website, you need not disclose it in the thing. So also place it in its website, if any, in such manner as described. Okay. And you should also ensure that the activities as are included in the CSR policy of the company are undertaken by the committee. So basically, the CSR committee will recommend the policy, the board will implement it. Right? The board shall implement that, ensure that the CSR activities are undertaken by the company itself or through any of the following entities. So, in case the company is, the board of directors not able to, because again, I'll come back to my original point. This is not the job of the board of directors. The board of directors are there to run the company, make money. Right, sir? They are not here to do public service. If a person says, I am interested in doing public service, he shouldn't be allowed to run a company. Sorry, being very blunt here. Sometimes second generation entrepreneurs, they may not have the drive of the father, but they will take over this company and then they will become CSR specialist, giving money. It depends on his horoscope. Some of these, if their horoscope is such that there are people who give kind-hearted people out. They are not suitable for entrepreneurial instincts, entrepreneurial stuff. But unfortunately, second generation entrepreneur. So the world expects him to be an entrepreneur. He wants to be a social worker. See the pathetic situation. So this fellow is given the reins of a multi-million crore company, multi-crore company. They are destroyed over a matter of 5 years. He'll destroy it and go in good faith, without any intention to harm. He wants to do good to everybody. In that process, he'll destroy the company's profit-making capability. And knowing his attitude, the wrong people will come and they will surround him and see to it that all the money and the company is entirely destroyed. And 10 years, 5 to 10 years, destroy and go. I'm giving these inputs to you not because I want to waste your time or anything, but give a broader flavor of the practical nature of life. So once you complete this examination, you'll have to go into the world. And there in the world, you will see all these things. So there in the world, you won't have the pristine comfort of your syllabus or your examination. That will be a little more, the world out there is more practical and dirty. And you'll have, which is why 2 years of articles, originally 3 years, now at least 2 years, to see the reality of life. So once you go into articles, don't behave like a student, complaining, always looking at your own welfare, always thinking of yourself rather than the firm or the client. Look at it from a broader perspective as a future practitioner or future employee of that company, and think like that and advise like that, talk like that. Suddenly you'll find you are growing. Okay, but if you continue to think in a very shallow way and about your own comfort, your own personal likes and dislikes, yeah, maybe you'll be smart in the short run, but in the long run, you'll be losing out on very important learning which could come through your principal, mentors, through the CFO of the companies which you are going to audit and all that. And they could all teach you. The CFOs of the companies where you're going to audit could not only teach you, may also hire you after you finish your final. If they see promise in you and they see a good personality and a good knowledge, they may hire you also. So a company is instead of doing the CSR themselves, the board of directors can, okay, within quotes, outsource it to any of these entities. A company established under Section 8 of the Act, or a registered public trust, or a registered society registered under Section 12A and 80G of the Income Tax Act 1961. Okay. So what these NGOs are there, they can do. There's nothing wrong. In fact, as I mentioned to you, I have fairly about 20% of my revenue, 20 to 30% of my revenue comes from NGOs, huge NGOs who hire our firm for conducting reviews and audits. Foreign NGOs hire us to do reviews. Now that we specialized in one or two in AIDS awareness, child relief. So we have done a lot of work there, and we know the realities. So of the ground level realities. I'm not joking. Not just paper audit or online audit. I've been there, right on the ground zero. I've been there and I've seen it. I walked kilometers to the villages. The jeep will be parked in one place. You can't. After that, the jeep also cannot go inside, and you have to see the people whether they have benefited, take photographs, talk to them through translators, and all. It was an exciting job, and I enjoyed it. It was how I don't. My people go. The early 5-7 years was me going there and seeing. That's good. So a company established under Section 8, we've already seen that. So all these fellows should be registered again for CSR. Okay, and they should have an established track record for at least 3 years in undertaking similar activities. So these entities which want to undertake CSR activity should register itself with the MCA by filing Form CSR 1. So from another angle, if you're advising a non-profit organization, you should ensure that their CSR 1 is on. Okay, and CSR 1 should be signed and should be verified. They will get one more registration. So many numbers. I have a whole pocket notebook where all my numbers are written. Aadhaar card, PAN number, passport number, driving license number, new numbers, SRI, SIR number, everything. I am a number. I'm no longer a human being. I am a number on some computer record. So a company may engage international organizations for designing and monitoring and evaluation of CSR projects. Also, huge. Okay. So it may also collaborate with other companies for undertaking projects or programs in such a manner that CSR committees of respective companies are in a position to report separately on such projects or programs. So I remember in Chennai, there was a CSR activity conducted by a company called Ashok Leyland, along with another very famous Chennai-based company called Rane Brake Lining. So both of them together did it in a slightly, I think, in Karnataka, they did somewhere near Tumkur. It was a fantastic project where they needed more money. So they said, let's both come together, and they did it clearly, accounting separately, where how much was spent by AL, how much was spent by Rane, and each one could clearly say, this is what we did, this is what we did. And it was done beautifully. As I told in the beginning of this topic, CSR can be a huge, shall we say, engine for growth. Social. No doubt. If properly done. It is like a nozzle of a spray. You have to spray correctly on the spot. Just allow it to go this way, that way, that is wasted. It will go to waste. So you have to identify the need, identify what is that key point that needs to be addressed here, so that within the next 5 years, you can bring about social change in that area and develop that area and take it forward. And one of the key criteria in most cases of social upliftment is education. You educate them, they take care of themselves. You don't educate them, they come begging. So if you want to create beggars, then don't educate them, just keep giving them money. But if you want to create people who are having dignity and who can self-grow and 3 generations later can become wealthy, then educate them. There is a basic difference between giving people stuff and giving people the ability to earn for themselves. So simple. So ongoing project means, so this means this has, now you are doing something. Now, as I already said now, you can throw money for year after year, you keep feeding, giving annadanam, you keep giving freebies, free clothes, free etc., free everything. That is one type of CSR. Another thing is to give something which is meaningful, building a school, building a studying area for children of poorer society who have a place where they can come quietly and study. At home, they don't have a place to study. Okay. Whereas if you build a small place in a public place with federal supervision, they can come and they can sit and study in the evening for 2 to 3 hours. Yeah. That will make a big difference in their performance in the exams. Okay. Think like that. And in that process, you can also give them social awareness and education and all that. What I'm trying to say, so this would need building, constructing building. It may take more than 1 year, in which case it's an ongoing project, a multi-year project. Okay, but it cannot exceed 3 years, excluding the financial year in which it was commenced. So 3 years, excluding the financial year in which it was commenced. And shall include such project that was initially not approved as a multi-year project, but whose duration has been extended. Okay. Now, in an ongoing project, what you need to do is you need not spend that entire amount in that year itself. But we'll be seeing later on that the money has to be transferred to a separate account. At last, we come to the crux. It's going to hurt us, the amount. The board of every company required to form CSR committee, or the board of every company required to constitute a CSR committee shall ensure that the company spends in every financial year at least 2% of the average net profit of the 3 immediately preceding financial years. So the formula is very simple. You take three net profits of 3 immediately preceding financial years, computed in the manner I mentioned earlier. That is, remove the foreign branch profit, remove dividend of companies which are already complying with 135, and total up 3 years, divided by 3, get the average. On that average, you calculate 2%. On that average, you calculate 2%. That is the amount to be spent during the current year. Okay. Before the end of the year, you have to spend it. Okay. Where the company has not completed the period of 3 financial years, then suppose only 2 years, then average of 2 years, only 1 year, then that year's profit 2%. So preference shall be given to the local area and areas in and all. Similarly, a company may instead of hiring the NGO, they may themselves take care of CSR by building CSR capacities of their own. Can be done. Large companies can do it. They can have their own CSR team. Part of this will usually come under HR, or it will come under generally under corporate planning or whatever it is. There'll be a CSR group who would focus on CSR and who would try to do this. Now, in those cases, it'll be good. Nothing wrong in that, but they don't want a company to only book non-CSR activities under CSR and claim. No. So they are saying the total amount, including expenditure on administrative overhead, okay, the total administrative cost shall not exceed 5% of the total CSR expenditure of the company in one financial year. So imagine during a financial year, you are required to spend 1 crore. Okay, so you have to spend 1 crore. Out of that 1 crore, 5%, 5 lakhs can only be spent for administrative expense, administrative overhead. Okay. Which is quite common because even for NPOs, non-profit organizations, one of the criteria we put is how much of the donation money was used for administration. Usually we permit only 1% there. 1% or 2% only will permit. Okay. If they're collecting donation and spending it, see, you are taking 100 rupees from a guy. He is giving it to you thinking that his entire 100 rupees is going to go to the beneficiary. Now, you can definitely, such collection and expenditure will need a group. So you might take, but you can't take 50% of it as expenditure and give for 2%. That is not correct. So here they say 5% you can spend on administration. Mr. Tiwari, we have already seen now what is not CSR and what is CSR. Within that framework, they give a lot of freedom. There is no such condition or rules to do CSR. Except this, though earlier we saw Schedule 7, what are the matters for which CSR can be done and what cannot be constituted as CSR. That's all. That is a broad framework. Within that framework, they don't insist on this. These are all frameworks. You can have see, they don't want to restrict your creativity or innovation. Anything you can do, provided it is not. See, I once visited a company called Orient Cement. They have a huge quarries wherein they do what is known as strip mining. Where in strip mining, you make a hole in the ground. Literally, there is a hole in the ground, and you take the limestone out. What is left is a hole, huge hole. Now that hole, you can just leave it. What this company did was it created it into a beautiful rainwater harvesting plant. And now, wait a minute, that will be not coming under CSR because that water is going to be anyway used for the company only. So that will not come under CSR. What they were planning was to create a park, give access to the public for a holiday picnic spot. So what a fantastic idea. Now that would become CSR. Okay. The water, what they do was they take that water which they collect and they use it to spray on the trees and their entire factory is green. But unfortunately, cement being what it is, the cement dust will fall on the leaves and lie on the ground and it will be floating. So they have to continuously pour water to settle it. So they use this water to spray and settle the dust. To a great extent, it saves the employees and even sometimes the public, because your cement factory can damage the lungs of people around up to 7 kilometers around it. For information, the lungs can be affected. Studies have been done. Yeah. Because of the fine cement dust going into your lungs, it's damage is there. Per limit, see, it's a good question you're asking. That's a nice point you're asking. See, 2% is compulsory lower limit. Upper limit hai, but not in your syllabus. Not in your syllabus. There is a limit under from the board of directors. There is a limit beyond which the board of directors have to take the approval of the shareholders. I think that limit was 5% of the net profits or something you can go, but there is not a limit. Board of directors can go up to that limit. Beyond that limit, if you want to contribute, then you have to go to the shareholders and get their approval. That's it. Once the shareholders approve, it's after all their money. Yeah. Spend the whole thing also, no problem. So this is what that exact percentage, seriously, I have forgotten because it is almost 4.5 years since they taught final syllabus. Yeah. 4 and more than 4 years since they taught final. Once it went out of your syllabus and self-paced module, I've stopped. So, but there is a condition there. Don't worry. 180, section 180, subsection 4, I think there's a clear limit up to which the board can spend. Beyond that, if the shareholders say, you can spend any amount. There is no such limit. The government does not want to put any curb. But the shareholders may say, why are you spending nothing? Okay, so that is the shareholders only can decide. Government has nothing to do with it. Okay. Hope I have answered your question. It's a good question, sir. It's a good question. Upper limit. There is no upper limit for the company as a whole, but there is an upper limit for the board. Up to that, the board can go beyond that. You go to for your information, there is no upper limit for contribution at all.
Progress.
So I don't know what you're saying, you over my company, but there I'm not doing any Is there not any restriction? I don't understand. There is a condition. If you're making 1,500 crore profit, yes, you have to contribute 2% of the average of the if this criteria apply to you, then compulsory CSR is there. 2% is there. Compulsory CSR is there. You have to contribute. You have to spend. If you don't spend, it's a violation of the Companies Act. If you're not spending, it's a violation of the Companies Act. Okay. I hope that's what Limited I have understood from your question. If you can be more elaborate, I can answer it better. I'm more like I'm becoming like AI. Many times when you ask a question to AI, if you are not able to ask it clearly, AI will say, this is the answer I can give you based on what you have given. If you give me more inputs, I can give you a better answer. And thank you for saying that you have understood. Okay. See, many companies are not advised. They are not contributing because they don't know. The auditor doesn't know. There is no company secretary to tell them. Generally, the company secretary will tell them. Generally, auditors don't. But as part of our audit, even we see one of my audit program items is any company that has this we have to, shall I say, see whether the company has to contribute to CSR committee. Then we will calculate all this. That will be our audit working paper, whether the CSR committee. So then we will conclude based on the data, this company need not constitute a CSR committee during the financial year. There was no requirement to contribute to the CSR. And that will be kept in the documentation. So that tomorrow, if anybody catches me like you and says, oh, you have not contributed, I'll say, boss, these are the criteria. They are not satisfying. Therefore, then. Okay. As simple as that. Fantastic. Now, Tripati Limited is listed company has made the following profits. The profits reflect eligible profits. That means calculated as per the Companies Act. So we need to find out what is the amount to be contributed. Can you calculate and tell me? Mr. Sridhar, I will answer your question. Let's finish this problem, but I will answer your question. I will answer your question. Just give me 1 second. I will answer your question. Twenty-two, 23, 120, 23, 24, 80, 80, okay. 24, 25, 500. Sir, assuming that this company is, the example you are given, this company is required to constitute a CSR committee, then when its profit of 24, 25 becomes 500, then what happens is the average of the, see in 25, 26, okay, they still have to contribute. Even if in 25, 26, so they are not satisfying. Suppose their profit has gone down also. For 25, 26, they have to contribute only 2% of the average. So 500 plus 580, 600, 700 into 2%. So 700 crores into 2%, 14 crores they have to contribute. 14 crores they have to contribute. So they will have to contribute, not more. 2% is the fixed limit. There is no increase because your profit went up. Good. That is why they prescribed it as a percentage of the profit rather than as a. So I hope you got it, Mr. Sridhar. So in your example, in 26, 27, they will have to 25, 26. 25, 26, they have to contribute 14 crore. That's all. Average of the 3 years, 2%. Simple as it's a very simple calculation. There is no need to get confused that because its profit has gone up suddenly, there will be an increase in the percentage. And as you have all rightly identified, the correct answer is 1 crore. Rupees 1 crore can be spent towards CSR. Should be spent rather, not can be. Okay. Friends, but I have a huge correct. Karanji, you are right. And Kashish, you're right. Sushmita, you're right. All of you are right. Beautiful. Excellent. Exam question. So you got something like 3 marks straight into your pockets. Okay. Failure to spend towards CSR. The board should specify the reasons for not spending the amount. And unless the unspent amount relates to any ongoing project, you should transfer it to that fund specified in Schedule 7. I told you to note it now that they will be forming a fund, Prime Minister Cares Fund. That fund you have to transfer within a period of 6 months. Okay. Anyway, we'll see what happens to the unspent amount a little later. Surplus arising on CSR. See, sometimes CSR activity can also involve some income generation also. Like I told you now, see, you support tribal women to give tribal thing, and you also give them marketing support. All this is good CSR, wonderful CSR, where you collect a huge amount and you give it back to them. You give it back to them, and but you keep something for your administration and all. No, initially you spent on CSR. Now that company is actually generating profit. That activity is generating money. Now what to do with that surplus? Sorry, that surplus cannot be taken to you and added to the business profit. No, that is not your business. You should plow it back into the same project. Or in case you're not able to spend that surplus, you have to transfer it to the unspent CSR account. Better don't have any surplus. Better price it in such a way that the beneficiaries get all the benefits. If there's an excess expenditure, means as somebody was saying, you spent more than 2%, no problem. You can set it off. Okay, you can set it off immediately succeeding 3 financial years. You can set it off. So suppose in this year you spent more. For example, 20 in the example given by Mr. Sridhar, in 25-26 they had to spend 14 crore. Am I correct? 25-26 they had to spend 14 crore. Now in 25-26 instead of 14 crore they spent 20 crore. Fantastic. 6 crore extra. Now what happens in 26-27? They are finding that they have to contribute something like 10 crore. Out of that 10 crore, 6 crore already they can adjust it. They can say that last year we spent 6 crore, that is gone. Only balance 4 crore they have to do it. Okay. But again, remember, any surplus you cannot set off. Okay. You cannot, for that set off, you cannot include surplus. Surplus should be spent. Surplus cannot be set off. No, surplus should be spent. Any current year surplus should be spent. Or else you set it aside for ongoing project. That is all possible. Okay. The board of the company shall pass a resolution to that effect. So Mary Limited having a turnover of 1,200 crores means there is a need for CSR committee. The CSR committee was formulated, was there, and the recommended a CSR project. Company finalized, which required funds at 5% of the average net profit for the last 3 financial years. So they are agreeing. They don't mind. They are allowed to do it. Up to 5%, as I told you, they can go. That's not an upper limit for the company. It's only for the board. The board can approve. Beyond 5, if they want to go, they have to go to the company. That's all. Okay. So they would spend more than 2%. The balance 3%, can they set it off? Yes, it can be. You can balance 3% can be set off against the commitment of CSR for the next immediately preceding 3 financial years. Simple answer, 2 marks straight away for you. Okay, that's all you write this, and don't write too much also. You can also incur capital expenditure. For, as I told you, you can construct a shelter for a nice, with a lot of lighting and airy facility for children to come and study. I'm not joking. You might think that I'm wasting your time telling all these things, but the same hard-headed capitalist that I am, I don't mind giving money for growing people. Any amount which I spent for developing a human being, for educating him, for her, for giving them training in skills, okay, I say it's well spent. Because it makes them self-reliant. It makes them a meaningful member of my society and the country to which they belong, instead of making them beggars. So your CSR should not create beggars. Okay, you should create people who can take care. Yes, give them the money so they badly need. Come up. See, you and I, you maybe your father and mother are very rich. My father was definitely capable. So he gave me the money to develop. These people don't have that advantage. Let us give that to them. But the next generation, they should become rich. The generation after that should become big. Then our country will become a truly developed, we will become a so-called developed, shall we say, superpower country. That is the only way we can do this. There is no other way to become a superpower. Unless every Indian becomes a superpower, India cannot become a superpower. If Indians continue to be beggars, then how can we become superpower? Okay. So the CSR amount may be, I'm very happy and proud to say that I have a foundation called Blue Dot Foundation, where in every year we spend at least, but for my sake, we spend about 6 lakhs, 6 to 7 lakhs. Last year, I think we spent about 7.5 lakhs, but meaningfully. And those people go and they are earning now and supporting families. They are educating their brothers and sisters, and it goes on. Okay. You can sow the seeds of prosperity and growth, is the point. So the CSR amount may be spent by the company for creation of acquisition of a capital asset. Such capital, so you can create such, shelters where the children can come and study. Small difference in a slum child's life. That girl can come and sit and safely study for 2.5 hours. She becomes a rank holder in school. She goes on to engineering. She studies and she becomes an engineer. One whole family becomes great after that. That whole family will go on to economic prosperity. Okay. So, yes, you created a capital asset. No, you cannot take it back into your balance sheet. It has to be transferred to any of these people, that company or the registered trust or society, or the beneficiaries themselves may form an association and take it, or give it to the government and renovate it. So you can't take it back into your balance sheet. Okay. So this, even if it's held in your name, it should be transferred within 180 days. Okay. If any amount remains unspent, that has to be transferred within 30 days from the end of the financial year to a special account called unspent CSR account. Then any amount pursuant to any ongoing project, please note it, your honors. Normally, if you are supposed to spend and you're not spent it within 6 months, transfer it to fund or else gone. But if you're saying it's an ongoing project and I have not spent it, doesn't mean that you can rotate it in your business. At the end of the year, within 30 days, you have to transfer it to a separate account. And from that separate account, within 3 financial years, you have to spend it for the purpose for which you accumulated it. Okay. In case after 3 years also you do not accumulate it, then within 30 days of date of completion, you have to transfer it to a fund under Schedule 7. So in a way, you're pushing that. That's all, 3 years. Within 3 years, you can spend. We have done it for many CSR fund question. Okay. In case it is not, that fund is not formed by the central government, it will be transferred to any fund included, like I told, Prime Minister's care, with the hands held together, you can see the photograph. Contribute to that fund. The board's report should contain details. We already saw this in 132, we know that. And wherever a company has an average CSR obligation of 10 crore rupees or more, in pursuance of section 135.5, it shall make an impact assessment. So where your average CSR obligation is 10 crore or more in the 3 immediately preceding financial years. So you take the CSR obligation, find out the average. If that average is exceeding 10 crore, then you have to undertake impact assessment for every CSR project of 1 crore or more. So your company is spending 30 crores average every year for the last 3 years. Out of that, 5 projects are more than 1 crore. Then those 5 projects need to be impact assessment. So that impact assessment should be done by an expert body. And whatever you spend there can also be included will also be added to the CSR expenditure to the extent of 5% of the CSR expenditure or 50 lakhs. So this is in addition to the 5% administrative expenditure. 5% administrative expenditure. In addition to that, you can spend up to 5% or 50 lakh, whichever is less. So highest level, if you are spending also 50 lakhs is the limit for impact assessment. Okay. The composition should be disclosed in the board's report, etc., etc. In case there's a default, then the penalty is twice the amount required to be transferred to the fund. That's why I always tell my client, even if you cannot spend it, transfer it to the fund and be done, rather than avoid the penalty or 1 crore, whichever is less. Officers, 1/10 of the total amount required to be transferred or 2 lakhs, whichever is less. Okay, but be very careful. CG, of course, has power to give directions and all that. Not important, don't worry. Okay, with this, we have almost come to the end of our topic. CSR is important from the exam point of view. Yeah. Banking company also has to do CSR. There is no exemption for banking companies. Okay. As of now, there's no exemption. And believe me, banking companies, public sector banking companies are already coming under the development projects of the they have to contribute more, much more than thing. In addition to it, the government regulations, they are contributing. Okay. For example, most petrol bunks, government-run petrol bunks, compulsorily they have to provide a toilet, clean toilet, and not necessary that only people who are coming to fill petrol can use. Any public can use it. So these are all extra expenditure for that company, and it won't go under CSR. See, it will be more than CSR. It will be, and that's a separate budget for that. And the officer in charge of that area, it includes checking whether the toilet is having water or not. If any smallest complaint, it will become a problem. So they have further obligations. Banks have further obligations. So don't think that banks are exempted. Free air is part of a deal. There is they give it to attract you. It is not. No. Don't go there. This is like toilet is available to the public. Yeah. See, air is available. If you fill petrol, they give air. Or you can go and take air also. That's okay. This is not a service. No, it's doing it to attract you. Everybody is doing it too. In Gujarat, if you go, see that way the government is doing a very good job in it. See, every 100 kilometers, they have a beautiful, pit stop where you can go. Good washrooms are there, and hotel, small hotel, tea shop, kirana, everything will be in one place. Every 100 kilometers. The same thing I saw only in Bangladesh. Same thing when I was driving from Chittagong to Tripura by road, I saw the same facility was available. Okay, internal audit, last topic of the day. Companies required to appoint an internal auditor. Again, this is the list. I told you, when you prepare that list, CSR list, internal audit, NAFRA, for all that you prepare one common sheet. Just to do what I say, see how confident you go to that exam. You will not have any fear of what is the limit and all. So listed company anyway has to appoint an internal auditor. Unlisted public company, paid up share capital of 50 crore or more, turnover of 200 crores or more during the previous financial year, PFI. Outstanding loan exceeding 100 crores or more. Outstanding deposits of 25 crores or more. Private company, turnover of 200 crores or more during previous financial year. Even a private company should have internal audit. But turnover 200 crores. Outstanding loans, borrowings from banks, or PFA exceeding 100 crores. Right? So these are the criteria. So Natraj Limited is an unlisted public company having paid up share capital of. See, let's go another 5 minutes and finish it off. Just to close this topic. Bear with me for another 5 minutes. Natraj Limited is an unlisted public company having paid up share capital of INR 80 crores during the preceding financial year 2021. The turnover of the company was 110 crores for the same period. Now, should the company appoint an internal auditor. Turnover 110, paid up capital 80. So paid up capital 50 crores or more, turnover 200 crores. Is it mandatory? Paid up capital 50, turnover 200, limit. It's an unlisted public company. So it satisfies now. It fulfills the criteria of paid up share capital. Turnover is less. So paid up share capital. If one condition is satisfied, it is enough. If you see, this or is very important. Even if one condition is satisfied, it is enough. Fantastic. Yes, mandatory. Beautiful, beautiful. That's it. You got it. Exam question. Yes, sir. Good. Now, Excel Limited is a company having paid up share capital of INR 25 crore and turnover of 100 crore during the financial year 2021. The company secretary has advised the board of directors that it is not required to appoint internal auditor, paid up share turnover less than the threshold limit. Do you agree with the advice of the company secretary? Eagerly waiting for your answer. Eagerly waiting for your answer. Karan has got the point. Vedant ji has got it. Sridhar ji, no, be careful. Ramachandran has got that. Sushmita also got. Everybody got the point. So Sridhar sir, irrespective of the limit, listed companies are covered. Listed companies are covered irrespective of the limit. There is no limit for listed company. The minute it is a listed company, it has to be done. But see, this question is slightly not fair because, to my knowledge, no company secretary will advise like this. On the other hand, they will say it is applicable. Then we have to show them in some cases it is not applicable. Like that. Sometimes they will wrongly state the law also. Yeah, Anilji, you are right. Absolutely correct. Wonderful. So you got the point. Okay. Now, Sikkim, again and again, these are similar questions. So be careful. Big deal. Who can be internal auditor? Of course, a member of our institute, a chartered accountant, a member of the Cost Institute. Then there is other professional, meaning company secretary can also do internal audit. See, internal audit is a specialized function. I'm going to tell you something. Though I've been in practice for the last 40 years, if you ask me to do an internal audit, I wouldn't be comfortable. I have two junior partners who are experts in internal audit. They specialize. All the internal audit work in our firm is done by them. I don't even go near that department. I give them I approve the necessary staffing. Sometimes they call me for consultation. I go when they have an issue about taxation or company law or something. The company wants me to come, they will call. Then I will go. Otherwise, on a day-to-day internal audit law, just don't even go there because that's a totally specialized function. These people can handle it. And they keep going. Sometimes I go. When they say, sir, you have to come and talk to them, make them understand that this is or that is or GST issues. I go. That is only for consulting and come back. You never go and get into the day-to-day internal because it's a specialized function. You need to be thoroughly aware of the process of a company, thoroughly aware of how a company is functioning, etc., before you can go there. Means ideal internal auditor would have worked in a company and then come out. Okay. But of course, even an employee can be an internal auditor. So the internal auditor may or may not be an employee. Sometimes large companies don't outsource it to firms, but rather they have their own internal audit department. Okay. For example, Ashok Leyland has an huge internal audit team. It's a battalion. And Mr. Seshasai, one of the greatest members of our institute, we should be proud of people like him that they are members of our institute. Very proud. You should do research on Mr. Seshasai, who went on. See, he started his career in internal audit of Ashok Leyland, assistant manager internal audit. Man never goes to any other company. He spent entire life with Hinduja. becomes CEO of Ashok Leyland, then becomes chairman emeritus, advisor, consultant, just simply say, don't go anywhere. And he's there. What a great man. Huh? But he started his life in the internal audit department of Ashok Leyland, which was the same job offered to me in 1997 when I qualified. I was just 21 years old at that time. I refused to join because I wanted to be in practice. So I said no. But that's a nice way to learn. Internal audit, if you spend 3 years, become thorough in the entire company operations. Thorough. You would have seen it. You will open the bonnet and see the workings of the company. And again, oil it and put it back together. So, fantastic opportunity to learn. So the internal auditor may be either an individual or a partnership firm or body corporate. The audit committee will appoint the internal auditor, formulate the scope, etc. Okay, so this is the beautiful topic called accounts of companies, which we have completed. I have also uploaded, I hope on my behalf, was done. I have uploaded a assignment which you may want to attempt it. And if you have any doubts, the answers also I'll try to send it to the institute. Fairly simple. It was a great evening addressing you all and interacting with you. Thanks for the wonderful participation. Wish you all the very best and look forward to meeting you again, inshallah, for auditing. Thank you. Bye. Sir, class over, sir.